Well, hello everyone. Welcome to Trading a Smaller Account. It is Friday, and I know a lot of you are probably really grateful that this week is about to end. So feel free to vote on my trade title or my class title for today. I don't know whether we want to call this Trade Management Secrets Revealed or How to Trade When You're Nervous, but we're going to look at some trade management. We're going to look at several examples of potential example trades and go through, when to hold them and when to fold them, to use my extensive card playing background terminology, or like, when do you place a trade and when do you wait? And one of the questions in a recent survey was, can you give me some idea of when to use which trading strategy? So we're going to talk about that as well. So we've got a lot to cover in our 45 minutes together. So buckle up and let's get right down to it. If you are not following Mike Fairborn and I on X, you are missing out. We are posting lots of information about the markets and other things as well. So Barb Armstrong CS is my handle. Mike Fairborn CS is Mike's handle. Consider this your formal invitation to join us there. Okay, so options. Know that just before we get into the thick of things, that options carry a high level of risk and aren't suitable for all investors. Also know that you have to apply for option trading privileges with Schwab. So if you've been practicing in your paper money for ages and are ready to go place your first live account, make sure that you have checked that box first. We use the paper money software application on the Thinkorswim desktop platform. There are some nuances and differences, and one is that short positions will never be assigned early in paper money. That can happen in a live account. And there are some other differences as well, but a great place to, practice. We're going to do a quick market overview. I'm going to throw in a couple of things that I maybe don't normally in our market overview component, but every morning at the market open, 4 days a week, there is a market overview, a Trader Talks class, and I encourage you to check that out. The one on Fridays is not archived, but is very heavily attended. If that's not on your rotation, I would consider adding it. We are going to play some new example trades, and we're going to do some trade management as well. And Marcus said, "Buckle up, Buttercup." I couldn't have said it better myself. And you may be just laughing and quoting my own lines back to me. I'm not sure, but regardless, I kind of gotta like that expression. So what's happened in our account this week? So if you come to net liquidity and day trades and click on that, you can see we were at almost 35,000 and now we're at almost 33. So we're down $2,000 this week in this account. So is Chicken Little out there freaking out? Are you ready to go open a bottle of scotch and drown your sorrows? I mean, scotch wouldn't be my drink, but and I say to that, nay. This is part of what happens in the stock market. And there is no reason to panic. We, at the beginning of this year, we started with 25K. And if I round, we're now at about 33. So that's still not too shabby. And this is paper money. So there's a bit of paper money entries maybe going on and exits. And, I was gone for part of the summer. That could have impacted the results up or down. But, if we take our 33 and divide it by 25, and this is, just an example account, we meet a couple of times, we're up still about 32%. So, no need to hide the knives. Okay. But we want to be mindful, and what the market giveth, the market can taketh away. So we want to make sure that we are following our rules. And one of the questions that came up in a recent survey is, you keep referring to these rules, and where do I find them? So spoiler alert, we may look at some financial stocks today, we may not. But when we look at the S&P 500, it's still well above the 100. It has been for a long time, the 100-day moving average. It's broken below the 30-day moving average today. It was flirting with it yesterday. But when you look at this, do you say, oh, wow, this is a total trend reversal. No, we're still only like less than 2 weeks away. So on October 29th, and what's the date today? November 7th, this market hit a new all-time high. And I look at this and I'm saying, this is still a higher low than this low. So the uptrend is still intact. Will it stay intact? Well, my crystal ball doesn't work any better than yours, but I don't think that this is an occasion for panic. But what it is a time to just be mindful. Okay. So with respect to, if you want to see some examples of rules, this is why you want to subscribe to the channel. Because if you come to the Trader, and I had this all ready to go ahead of time. So Trader Talks from Schwab Coaching on YouTube, when you first bring it up, what the default is it will show you what is currently being taught. But if you come to playlists, because I am like nerd alert, like this rule following person, I like to have a set of rules I can kind of play by. And it helps you when there is a tendency to get emotional when the market starts doing stuff like this. Like Riceberg said, we're in the midst of some rolling rapids. And, I get a kick out of whitewater canoeing. Like I used to be a big canoeist. I had 3 canoes, one for whitewater and one for flat water. And it's a real rush. But, when that rush involves your finances, sometimes we'd prefer it to just be like a nice current taking us down a river to success, right? We don't want to have to be dodging all these boulders in the water. But here's and this is not complete, but here's a number of example trading plans. So of late, we've done a lot of long call verticals. So here's an example trading plan that you can use to create a framework for your own trading plan, one for short put verticals. We've done some long calls with, 1 ATR targets. And, if you want to do a long put, I haven't posted that one yet, but you just flip it and reverse it. We've done some buy rights. So there's a bunch of example trading plans here, more to come. And then somebody said, you often talk about candle patterns, and can you point me to a resource? So yes, here's a resource. Yeah. And so, I'm only about halfway through, but here's a bunch of short videos. So what's an inverted hammer? What's a shooting star? So, bullish, bearish, they tend to go bullish, bearish. Yeah. And so, and these are all like 3 to 5 minutes long. And then if you want more, like want one class on this, if you come to, and there's a link to it at the end of all of those, but if you come to getting started with technical analysis, which is an introductory level class, there is one on using candlestick patterns for entries and exits. And I'll put a link into this series. And it's just, this entire class is about candlesticks. So if you're newer to technical analysis and somebody said, yes, I've broken a few canoes. So I know we don't have a lot of time, but we were on this river one time early in the spring, which is when whitewater is really running. And there were icebergs kind of floating in the water. And the other canoeist, the other canoe, we both bought these hand-laid Kevlar canoes, and he wrapped it around the abutment of a bridge, and we got a piece back like the size of a Frisbee. Yeah, that was that canoe's inaugural run, first and last, like the Titanic on a very mini scale. And after that, there was alcohol involved. I will say that. Anyway, okay, onwards and upwards. I'll post a picture of that because I was taking a photography course at the time. So I do have some pictures of us rappelling off that bridge trying to retrieve bits of the canoe. Okay, so there's our SPX, the NDX, and just before we leave our SPX, it is still up 12% year to date. The NASDAQ, it's still up 16% year to date. And today is breaking below the 30-day moving average. But again, is this a higher low? Yes. Is this a higher high? Yes. Is the uptrend still intact? Yes. Yeah. Yeah. So there we go. And the VIX, what are we expecting to have happen there? Yeah, it's going up. It's back over 20. So what does that mean to us as traders? Well, it means you may want to batten down the hatches if you have stock positions, but you also could see an opportunity if you trade options that there could be more premium. All right. All right. Okay. So that's that. Now, just one other thing on, a cautionary note. When we look at dollar SPX A50R, what is this? Well, it's the percent of companies trading above their 50-day simple moving average. And at one point back here in the summer, at the beginning of July, Canada Day, it was 80, it hit 83% of stocks in the S&P being above their 50-day moving average. Okay. And now we're down to, like, today, we're at 38. So that is sobering. And perhaps that's why, Chris is saying, that it doesn't feel like an uptrend, but the chart isn't showing that. Well, this chart is. This chart is. And so I'm not trying to, put rose-colored glasses on and deny what's going on. But it's important for us to manage. And most of the positions that we have on right now are bullish. So when we look at trade management, what's the secret? Well, the secret is to continue to manage your trades. So when we look at these, what's our rule? Our rule is if it's close to 50% up or down, we want to look at it. And we have these 5 long call verticals. The only one that is below 50% is Intel. And so let's go and look at this, because Intel has ranged from 30% down on that short vertical to now it's over 50. But when we look at Intel, up 87% year to date. And here's our long call vertical. I don't recall which date we put this on, but we're coming down to a pretty solid support level here. And we've got this inverted hammer. So even though this is just over 50%, we're going to wait and look at this again Monday to see if it rallies, because we have until November 21st on this. And all the others, like we've got Lam here and Triple M, if we wanted to go look at those, but they're not at 50%. So if you were in a hurry, you might just say, I'm just going to wait. Lam, Triple M. And again, here, we had this diagonal resistance breakout. It came back, was caught by the 30-day acting as support, and this seems to be holding. We have a bit of a bullish engulfing here, couple of hammers. So does this mean, is this a hammer or is it a hanging man? Well, we don't really know yet. So we may just wait on those and see. Okay. So, even with conversation in a pretty short period of time, we've reviewed these. Now, ISRG is up 54%, and at 80%, we say, let's take the money and run, cue Steve Miller. But, ISRG, if we look at this, if we had a hanging man type candle pattern or any type of candle configuration saying, hey, this uptrend may be over, then what we might choose to do is take that 50%. Because what the market gives, the market can take it away, as I've said before. But, we had this bullish engulfing pattern here, and it's continuing to move up pretty dramatically. And so, if we look at that, we might just say, hey, we're going to just hang in there and maybe over the weekend, we've got more time decay working in our favor, close it out perhaps on Monday. Okay. So now we've just reviewed, 7 trades. All right. Okay, so let's go and look at a couple of potential opportunities. It was, I'll type it in because I thought this was very cool. I learned this from Brent Moore's. $ SPXA 50R. So somebody's saying, what was that SPXA thing? David, there you go. Okay. So let's come and look at, somebody just mentioned James Boyd, and James Boyd and I tease each other a lot. We used to talk about the stock Crocs a lot, and don't mock the Crocs back a few years ago when it was like a $20 stock. And we'd have to go back a ways now. Like, let's go back 5 years. Well, even in the last 5 years, like it hit a low of 46, but this was tradable for us. Like if we wanted to buy the stock and do a buy right or that kind of thing. But, if we come and look at the last 9 months, this stock has been on the struggle bus. But if we look at it, we've got this pennant pattern happening, and it could be bouncing, off a support level. And we did a similar trade on McDonald's in our Getting Started with Technical Analysis, an example trade on Tuesday. But we have this inverted hammer. And if you're looking at candle patterns, the candle pattern rules or guidelines say when you have an inverted hammer, you want to wait for confirmation. And what is confirmation? Confirmation is if the next candle is above. So we can look at that Monday. So here we had a Hirami pattern, and that did work out. Here we had a hammer, and then that did work out. Another hammer, and it worked out. But just because it worked out this time doesn't mean it's going to work out this time. And so if we're following our rules, and when the market is pulling back, but the idea here is, could we do a 1 ATR trade on this? And so another question that came up in the surveys is, what kind of trade would I do, and why would I pick one trade over the other? And so when we look at this, and we're not going to place a trade on this because we're going to follow the candlestick guidelines and wait for confirmation, but we might choose to buy a long call with a 1 ATR target because we might be in and out of it quicker than if we, bought the, did a long call vertical, which even if it goes through both our strikes, depending on when our expiration date is, it might take longer to hit our target, or we might choose to do a short put vertical. If we're thinking that volatility is currently spiking but might go down. For example, if the government shutdown ends, the whole market might see a boost, like it might not. But if you're thinking, like, now that, several hundred flights a day are being canceled, there might be more pressure to come to a resolution, and that might help the market overall. You might want to take advantage of a short-term bump. But with Crocs, we just we want to wait and follow our rules. And you have a rule, and, if you want a fun guideline, story, I told a story about my son on Monday. You can go back and listen to that one again. But with AMD, again, this has come down. But if we come and we look at the live news on AMD, UBS raised their price target to 300. That's way up here. Citigroup raised their price target to 260. That's close to this high. JP Morgan raised their price target to 270. But today, what do we have? Well, it's come back to the 30-day moving average, but we want confirmation with, this might be a Morningstar pattern setting up, but again, it might not. And so we may just want to take one hand, take the other hand, and sit on them until we get the confirmation we're looking for, when the market is a little more volatile. We want to keep our paddle in the river so that we can react quickly when an opportunity comes our way. But we don't want to overreact, because that's when you end up swimming. You know, and we'd like to stay high and dry. Okay. So here's, you know, somebody said, why don't we look at a bearish opportunity? And all I can say is your wish is my command. So let's look at Toast. So here we have a stock that has been downtrending, right? Like year to date, it's down only 3%. There's lots of stocks that are down more than that. But, you know, it hit this high up here of 49. And it's been kind of falling since. And then we had earnings, and it actually beat on earnings and had a little bit of a bump, but it's continuing to fall. And this is a company in the financial space. And what they do is they have a cloud-based technology that's focused on the restaurant industry in the US, Ireland, and India. So if you're looking at this and saying, well, you know, the analysts seem to be split, some love it, some are neutral, some hate it, and that's not that uncommon. But if we take a look at the fact that the job cuts in October in this country are the highest that they have been in the last 2 decades, Amazon alone, you know, cut pretty deeply. I think they let 14,000 people go, and, you know, their number is going to be up to 30K. So if we kind of, this is a 10 and this is a 30 and this is 100. So if you look at the top, this top line here, it shows you this, the red line is 30, the blue line is 10, and the simple is 100. You could make it 20 and 50. You know, somebody's asking, you know, what moving averages, and these are the moving averages. We're using the 10 and the 30 mainly because we do a lot of short-term trades in this class. But if we look at this downtrend, which has been really going on since August, and then we see here, you know, high, lower high, lower high, lower high, lower high, you know, lower low, lower low, lower low, lower low, lower low. And then we had this bearish engulfing candle, and it's continuing to the downside. So this is one where, you know, could we do a long put vertical? We could, but this is a $35 stock. When we do a 1 ATR trade, the idea is get in and out quick. We want to be, you know, as retail traders, we're trying to be small, nimble, and quick. And so if we say, okay, this, and let me switch this, and we'll bring up a scratch pad. Let me bring it down to the bottom. So if we say, here's our Toast example, 1 ATR. And the idea is this is the average true range, which means from the low of the day to the high of the day over the last 14 days, on average, this stock has moved about $1.68. So that's how much we might expect this stock to move in a day. And so what we're going to do is take the low of the day. So if we take the low of today, that's 35.52. So our target is going to be 35.52 minus $1.68. And that comes, I'm going to make it $1.67 because that's what it was. Okay, $1.68. Stick with it, 33.91. That should be. Feel free to check my math, guys. And then the high of today, if you hover over the candle, 36.27. And then we'll walk through how we manage this on Monday. But the net of it is, if it doesn't hit our target on Monday, at the end of the day, Monday, we're going to snug our stop up to 20 cents above the high of the day. Because if we're wrong, we want to admit it quickly and get out quickly. So 37.94 is where we're putting our target. And you know, what I'm going to do is I'm going to put in our target and exit after the class, because I'm still having trouble with this screen that I'm using in accessing. And I'm sorry to do that, but I still can't access. We're going to go out to December. Now, if we only plan to be in this for, 2 to 7 days, maybe 10 days at the most, why would we go all the way out to December? Because the time decay is going to be less. And so if we look at this and we say, if we buy this 35 put, this at the money put, how much are we risking? We're risking $1.69 to $1.77. So we could do 2 of these and we're risking less than $500. So we're going to buy singles, and then I'll have to put that exit in afterwards, because it's freezing up my system when I click on this little icon. Okay. So we're going to confirm and send. We're going to do 2 of these. I'm going to get with our tech people to try and get this sorted out this afternoon. So this is a long put. Now, could we do a long put vertical? We could. But what's the danger in a long put vertical? Well, with a long put vertical, the advantage is you're risking less because you're buying a put but then selling one. What we want to do if this comes down is, as soon as it nicks our target, it will exit the position. Where even if it goes through both our strikes, we could, we could not have hit our target. And then if it bounces, then we're, she loves me not. We're profitable, we're not. We're profitable, we're not. We're hopefully, if this comes down and hits our target quickly, and our target is going to be 33.91. So if I edit this, I'll make it 33.91. Maybe it should have been 93. Okay. And this is going to be our 1 ATR target. That's on the right. Okay. So that's that one. Now, what if you're saying, I don't really like doing this whole option thing. I'm kind of new to this whole world and I'm not that comfortable with it. And there are some stocks that seem to be, pretty solid. Could we look at something, and try and take advantage of a bump using, a small move using a stock? And so I've got a couple of examples that we could look at. And so one is CVS. So CVS is up 78% year to date. And you might say, hello, haven't we missed the move? And so some might say, well, yes. And others might say, well, when it broke out here and hit a higher here and hit a high, we might have said the same thing. And if we'd bought it, when we had an entry, we'd be pretty happy we did so, wouldn't we? And so if we come and we look at, we recently had earnings on CVS, and it beat on earnings. And then if we come and we look at, what do the analysts think? Well, Piper Sandler raised their price target from 81 to 99. That's close to 20%. Raymond James raised their price target from 75 to 90. TD Cowen, what? They just didn't want to be left out. They raised it by a whole dollar from 99 to 100. Argus from 80 to 91. So it would appear, and who knows if these analysts are right? They could be totally wrong. Cantor Fitzgerald from 78 to 95. But 95 is up here at the tippy top of our chart. And so you might say, well, there could be some kind of stormy weather ahead. you know, in the markets. And you're right, there could be. But if we buy the stock and we don't have the concern about time decay, maybe we could just eat. And you're saying, well, like, I don't want to be a long-term holder. I want to make some money to pay for Christmas presents this year. Or I want to go to the, you know, the one I've been using lately. I want to go to the market drive that Schwab is hosting for free in Anaheim at Thanksgiving, the weekend before Thanksgiving, and then take my family to Disney. And I want a little extra cheddar to be able to do that. And so if we said, okay, like, what if we bought some shares? Like, we can have in this class up to a $5,000 position. So what if we bought $5,000 worth of shares, or 50 shares, and we put in a target of 85, and then we put in an exit below this recent low at, say, 74.40. That would be 2% below this recent low. You might say, well, I don't want to take that much risk. Well, how much risk are we taking? Well, let's figure it out. So let's come to our trade tab. Now we're looking at a stock option where we want to buy custom, and I'm going to let the system do the math. So I'm going to click this paper, you know, to me, it looks like a firecracker turned into a paper clip. And then when you click anywhere on these lines, it'll line them up. So we're saying 50 shares. And we want to exit when it hits that recent or close to that recent high of 85. And if it comes down to 74.40, we want to exit. And we're going to make these good till canceled. And when we hit confirm and send, you know, we're saying, okay, we want to buy 50 shares at the current price. And then we want to sell if it goes up by $6.34 or down by $4.26. Now we can risk up to $500. Now, just because we have a stop in place, does it guarantee we're going to, you know, get out at the exact price that we've requested? No. And yesterday I posted a bunch of stocks that had gap down on earnings. And so if you have something gap down, it'll trigger an exit. Like, and if it gap down to 70, we might get out closer to 70. You know, and somebody is saying, like, why not do a synthetic? Well, we could do that, but with a synthetic, with a short put, we're taking a lot of risk, more risk than we can take in this class. So we'd have to make it a short put vertical, you know, to technically honor our risk rewards. But I like the way you're thinking, and I like your question. Yeah. Okay, so let's come to our stocks with targets here. And this is a swing trade. And you can do a swing trade with an option, or you can do a swing trade with a stock. You can do it either way. Okay. So here, and is this below 5,000? Yes, it is. So are we okay? We're okay. So, and are we honoring our risk management rules as far as max loss? We are. Okay. So we're going to put that one in. Now I wanted to look at one other stock position, and that's UPS. You might say, UPS, like, isn't this stock on the struggle bus? And yes, it is. Yeah. Yeah, and one of the reasons that I chose CVS, I was in the chat yesterday for the class at noon Mountain. Let me just look up what that's called. Thursdays. I forget the title of it, but it was someone from Schwab talking about how they rate stocks, and CVS was in the second percentile. So you know, they gave CVS was highly rated, and you know, they said the fundamentals, there were a lot of characteristics that were strong, and so I wanted to go look at the chart, and that's kind of what brought my attention to it. But if we look at UPS, yes, it's been on the struggle bus. And it came down here and started to trade in this sideways range. And next week, we're going to talk about stocks that have been trading in a channel. And some might look at this and, if you're playing I Spy with my little eye, and I always forget to clear this, so let me do that. And I could, stretch this out a bit. Just one sec. So if we kind of look at this, do you see an inverted head and shoulders? What do I mean by that? It's where you have it pull back and then it comes up again. Sorry, this should be kind of over here and then pulled back again. So, post Halloween, it's kind of ghostly looking, but then it gapped up on earnings, pulled back and is moving to the upside again. And so you might say, well, there was that horrific cargo accident with a cargo plane that crashed, and there were a number of fatalities. And for anyone who, knows people that fly for a living, my heart goes out to those people impacted. But, if we take a look at this latest earnings, which was on the 28th, and we scroll down, what was the reaction? Well, JP Morgan raised their price target from 85 to 97, kind of similar to the CVS, right? Like maybe not quite as dramatic, but Bernstein 117 to 122, BMO 96 to 105, 96 to 103. Like that's up, at the top, closer to the top of the chart. UBS to, 113, Truist to 120, like that's 120 is off the chart. But again, could we say, I'm thinking short term, I just want to, cue Steve Miller, take the money and run. Could I put in a target here around this 100 mark? And just go for that little bit. And then if I look at the recent low on UPS, say, okay, well, here's my recent low. I'm going to go 2% below that. So again, we'd come to our trade tab, right click. Can we buy 100 shares? Nope. We could maybe buy 50. 50 would be less than 5,000. So again, I'm going to go to 50. I've already got my firecracker turned into a paper clip. So I just click. I'm going to put my target in. Maybe we make it 99. Instead of that even 100. Good till canceled, good till canceled. And our stop on this one would be at 89.27. 89.27. Confirm and send. So again, with this one, how much are we risking? $5 a share times 50. That's about 250. Again, no guarantee we're going to get out at that price if it were to gap down. So we're risking slightly, like our stop is below where our target is. But like if we do a short put vertical, often the risk reward ratio is about 3 to 1. We're looking to make $1 and we're often risking 3 to make it, but we're trying to look for a higher probability trade. If this would break your rules and you want this to be 1 to 1 or higher, you'd either snug up your stop or you wouldn't place the trade. But so I just wanted to point that out. But if you're saying, I'm looking at the charts and I think that the charts say this has a higher probability of success. Now the charts sometimes don't go the way we, things don't sometimes go the way we want or the way we're expecting. But this is a swing target. It was recently there. And the idea is just to put our target here. Well, actually, we made it 99. There's our swing target. And that's kind of based on a combination of, this recent change in the trend. And, even though it is down 24% year to date still, we've seen a move up of 15% in the last 19 trading days. So it appears to be, moving to the upside. And is this a long-term trend change? We don't know. We're just looking to try and be small, nimble, and quick and come in a disciplined way. Now, if it gets up to, maybe this, where this opened around 98 and it looks like it might be turning around, might we choose to take the money and run? Absolutely. Might we snug up our stop if it comes up and pulls back and then bounces again? Yeah, we might do that too. So, we placed a couple of trades today. We did a bearish trade on Toast, and then we bought 50 shares of CVS with a swing target. And then we have an order in. And so with UPS, I have these alphabetically listed here. 94, it's saying they now want 9503. Okay, be like that. So if we don't want to chase it, but if we're saying we want to make sure we get filled, we're going to go in and put that in again. This is a swing target. So I'll make sure that one fills. So as we wrap, here's my ask of you. One, there's a survey in the chat. And as you know, there are only 2 questions, and you rate it from 1, I hated it, to 10, I loved it, and I'm going to keep coming back, and everything in between. And then you can put comments in. If you have questions that haven't been answered, let me know, and I'll try and answer them in an upcoming class, or I'll post something on X. If you have ideas for future topics you'd like me to cover, let me know that too. Do you like the pace, the number of trades we place? Yeah. And know that this is also archived. So if I'm moving quickly and you're new to all of this, you can always go back and watch it in the archives. Which leads me to, if you haven't subscribed, you'll want to do that. And if you would do me a favor and hit the like button, what that does is it moves it up in the algorithms on YouTube so more people can find this content. So would appreciate that. And as I say, it's a chance for you to do a favor for a random stranger without leaving your desk, if you like this content and you'd like to share it. So guys, that's a wrap for today. I want to thank Mike Fairborn for his help in the chat, the guys behind the scenes for their help in bringing this class to life. And I want to thank each and every one of you for being part of this. I was so excited when I got introduced to this education back in 2011, and I'm still excited to be part of it, even though I'm now on the other side of the camera. Get out there, have a wonderful weekend, hug someone you love, and I'll see you on Monday. Lots of great content still to come, so stay tuned. Bye for now.